What's up, Banter fam? In today's show, I'm going to be breaking down one of the hottest altcoins on the market right now and showing you why its run may not be over just yet. I'll also be showing you a staking strategy for you guys to be able to maximize your gains in this ecosystem, and I'll be showing you the best way to stake it to earn passive income. It's going to be a massive show. Let's get straight into the show. So when I woke up this morning, the market was looking super bullish. I remember waking up and Bitcoin was at 42.5K. I had a big smile on my face. I did a nice good morning tweet. And then progressively throughout the day, the market just got worse and worse and worse. And now by the time I'm streaming, we're back around 40K. I have said for a while that the 40K level of support is quite strong, and we seem to be holding up at this range quite well. However, we know that we still are largely range bound at the moment between this 38K and this 45K region. If you watched Carl's show earlier today, you would know those are the key levels. So at the moment, we are still hovering in this range. So we're getting good trading opportunities, but we're getting good accumulation zones, but we're not getting amazing opportunities to make capital from trading in this market. However, we're still getting some great opportunities in the DeFi ecosystem. And that's why today I wanted to talk to you about this altcoin, because we're getting some chances to earn some really nice passive income in an ecosystem which is paying some very high APRs. So I'm just going to get straight into it and reveal what I'm talking about, guys, because it's wNear protocol. And you've probably heard a lot of hype about wNear, but today's episode is about breaking down the facts, letting you guys know exactly what is happening in the wNear ecosystem, showing you guys my favorite wNear staking strategy, and then you're going to hear my thesis of how high I think the wNear token price can go over the next year or so. So we can see across DeFi Llama, there is a lot of red. Many ecosystems over the last week have lost TVL, including the likes of Phantom, BSC, Arbitrum, Waves, etc. But there is one shining sea of green in this entire DeFi Llama, and that is wNear. I mean, it's up 22.74% for the week, making it one of the best performers on DeFi Llama. So wNear is still performing very, very well against the rest of the pack, and its L2 blockchain Aurora is up 14% for the week, and it's still performing very well. But the question is, why is it performing well? Is it too late to get involved? And what sets wNear apart from other L1s, and what makes it a good investment opportunity? So the first thing to note about wNear is that it's designed with scalability in mind. Obviously, with the blockchain trilemma, you're trying to get scalability and security both evened out. What wNear's focused on is it's focused on scalability primarily. So it introduced a technology called Sharding, which is one of the major ways that you can make your blockchain faster and more scalable. Now, Sharding is a piece of scalability technology that's coming to Ethereum over the next couple of years, but wNear has implemented it straight away. And that's one of the major reasons why it has a technological advantage, because its technology is very, very sound. So basically, it's an L1, just like Ethereum, just like Phantom, just like Avalanche. wNear is another L1 ecosystem, which has quite a lot of backing compared to other ecosystems. So let's break down what it's doing right now and what sets it apart. And there's no better way to do that than on the DeFi Edge's new thread. He did a very nice thread on wNear protocol and why it could be one of the best blockchains in crypto over the next few years. So he goes on to state that wNear achieves scalability through sharding and dynamic sharding, which is kind of like Ethereum, but it's happening a year ahead. So Ethereum wants to implement sharding in 2023. wNear is doing it right now, so that is a major plus. Dynamic sharding means it can adjust the size of shards based on demand, which means wNear could see a TPS of over 100,000. I mean, that speed is basically unheard of in crypto right now. So that would be a massive result if they can shard over to the level where they can facilitate 100,000 transactions worth of TPS. So it has private shards, it has a Doom slug, it's got nice technological innovations which do make the wNear protocol very, very fast. So we do see a time to finality in around a second, like Phantom, and we also see a super high TPS. Whenever I do look at a protocol, though, I want to look at the team behind the protocol. And the major part of L1s is obviously the team that is backing it. So they do have some very, very good developers that are developing and a very good team that is backing the wNear protocol. So they've got Alex Kidanov, who is a former developer at MSFT and engineering. They've got a former engineer at GOOG. And these team members have won multiple international programming competitions. So it's always good to have the best developers when you are looking at a piece of technology. Now, this is probably the major thing that makes wNear stand out for the rest of the pack. And this is one of the major reasons why the wNear token price has been performing so well. And that is the large amount of funding it has. So they have an $800 million ecosystem fund, development ecosystem fund. So this means they're incentivizing protocols to launch on wNear because they're offering them dollar incentives. So if you're a protocol and you want to launch on wNear, if you hit certain objectives like TVL, transactions, etc., you are then eligible for some wNear tokens through the development fund, which is a major thing because they are giving out $800 million worth of grants, which is quite massive. And they also have $533 million worth of funding from every A-list venture capital. So the thing with wNear, and this is the positive and the negative, is that it's extremely VC backed. Extremely VC backed. It has some of the biggest backing in crypto. It's got more backing than Solana had. AVAX is very VC centric, but wNear has even more VC backing. So this is a risk and a positive. The positive is it obviously has a lot of supporters. So these VCs wouldn't just be chucking at money at a pile of crap. They want to chuck money at something that actually has innovation and that has a nice ecosystem behind it. So that is a positive, but the negative is that the tokens are highly, I guess, controlled by a small percentage of people, a small percentage of holders with a lot of money, aka the VCs. So I guess wNear could be prone to more volatile swings in price, upwards and downwards at the moment. So let's look at the metrics. Let's break down some of the statistics on the wNear blockchain to work out whether it is an investment that is worth making today. So let's look at some of the stats because it has grown significantly over the past few months. And that's why I wanted to talk about it on today's show, because I don't think it's one we can sleep on any longer. In its initial phases, I was a little bit skeptical. I was like, okay, heavy VC backing. What does it do differently from other L1s? But now I'm starting to see the ecosystem develop. My eyes have really opened to the wNear ecosystem and what's actually being built. So if we look at their daily transactions, it's 700,000 transactions a day, which is quite high because if we look at Ethereum at 1.2 million a day, we look at AVAX at 800, Phantom at 700, wNear stacks up to all of them. So wNear is actually very competitive in terms of daily transactions. Here's another very interesting fact from wNear in terms of metrics. The number of total accounts on wNear is actually around 7 million. Now, this is a large amount of accounts compared to other chains. I think AVAX has 2,000 wallets. wNear's pushing 7 million. The one caveat I will say to this is that accounts on wNear can be made using an email, so it's very easy to sign up. And the amount of active accounts doesn't quite reflect the amount of total accounts. I think we can see that the daily number of active accounts is a lot less. It comes in at around like 1,000 daily number. So that's active contracts. I think the daily number of active accounts is like, what is it here? 400 or 500. So it's not as active as the other chains. But whoa, if we scroll out a bit here, we've seen that it's grown a lot actually. It's grown up to 17,000 daily accounts. So that's a lot better than the 1,000 I was quoting before. So the number of active accounts is a good indicator into how many people are using the chain, and in tandem with the daily transactions, it's clearly not something we could ignore anymore. So it's not something we want to ignore, but why does it make a good investment? Because that is the different question in crypto. There's a lot of chains that are active, but it doesn't make them a great investment. We saw Matic have, I think, like 5 million daily transactions one day. That didn't necessarily mean at the time it was the greatest buy. So why would wNear potentially be a protocol you want to have a look at? The first thing is Aurora network. So Aurora is basically the L2 that operates under the wNear protocol. So Aurora is EVM compatible, meaning it runs off the Ethereum virtual machine. This means that it's very easy to deploy new dApps, decentralized apps, on the Aurora network because it's EVM compatible. Now, wNear uses its own consensus, so it's not EVM. So having an L2 like Aurora underpinning the wNear network is very, very bullish because it can speed up user adoption. And this is exactly what we've seen. The Aurora ecosystem has been exploding and it's been building out at a very rapid pace. We've seen multiple DEXs, SushiSwap, Curve also launched on Aurora. We've seen DeFi protocols like Ribbon, Metapool, which I'll show you an amazing staking strategy for that in just a minute. We've seen Zoo launch. We've seen multiple other protocols, infrastructure protocols, borrowing lending protocols, all launch on Aurora. And that's why the TVL on Aurora has exploded. So if we look at the TVL of Aurora, it's actually almost $1 billion compared to wNear at 500 million. So the Aurora TVL is much larger than wNear itself. That's because this EVM compatibility gives developers a huge incentive to deploy on Aurora and makes it a lot easier for users to use the network. So that is the first bullish catalyst for the wNear protocol. The next bullish catalyst, and I'm just going to skip to the end here because we are going to cover this staking strategy afterwards, and I've got a great play for you guys to use in the staking. But this is the next bullish catalyst, and this is the major reason why wNear is being talked about all over Twitter at the moment, why a lot of YouTubers are starting to cover it, and I wanted to get on board before this launches, before the whole world knows about this. So it's USN. If you don't know what USN is, it is the new stablecoin launching on wNear. So similar to UST on Luna, wNear is trying to copy that model with their new algorithmic stablecoin called USN. And there are some major advantages to launching this stablecoin that I think could set the network in good stead going into the future. So people speculate, and the reason we're saying speculate is because it hasn't been officially announced, but they are launching an algorithmic-backed stablecoin called USN. So as I said, like Luna has UST, wNear has USN. And there are some public testnets which are already testing the USN token. So why USN? Why are they implementing something like this? Well, a large demand of UST comes from Anchor Protocol. So if you guys don't know, when Luna first started, and still to this day, in order to incentivize and bootstrap liquidity to come into the Luna ecosystem, they launched Anchor Protocol with a 20% APR. Now, this 20% APR basically means that a large amount of liquidity was able to be attracted into the ecosystem. So what's happening is wNear is doing the exact same thing. They want to launch a kind of protocol similar to Anchor, which incentivizes people to stake and mint their USN stablecoin, which will pay a higher APY than Luna did at the time. So the DeFi Edge says here that if wNear can offer an APR of 20% or greater, then they'll be able to siphon many users over. This will be users from other blockchains, users potentially from Anchor and the Terra ecosystem that could come over to wNear to chase this APR. Now, if this stablecoin performs well, and honestly, at first glance, I think it will, then this would be a great attraction to bring users onto wNear. So you guys have to remember that when a stablecoin becomes popular, this opens up a raft of DeFi opportunities across the chain. It opens up borrowing and lending. It opens up new DeFi strategies. It opens up a lot more in the ecosystem than you would have without a native stablecoin. So having that stablecoin is quite a large bonus for the wNear protocol. Now, there's some other great threads on wNear going over how they're going to attract liquidity through the APR. Just like Anchor did with Luna, wNear is doing a similar thing. Now, we saw how much UST Terra could actually attract, and it really drove demand for Luna. Well, wNear is doing a similar thing because these are the tokenomics of the wNear protocol in regards to USN. So wNear will actually need to be staked in order to get USN. So it will reduce the circulating supply every time USN is minted. So that is why it's a bullish factor for wNear, because it not only reduces the circulating supply, but it gets more people into the ecosystem. So how high can wNear go? And I'll let you guys read through the DeFi Edges thread because I think it's really good. But I want to have a look at just how high wNear can go realistically in the short term, and then we'll look at a staking strategy to get involved. So I really compare wNear to something like Solana. So if we look at the wNear protocol compared to Solana, it is roughly a 3.23x from Sol. So I guess that's a positive and a negative. The positive would be it's still got room to run. Compared to AVAX, its FDV is still roughly a 4x. Compared to Sol, it's still a 3x. So that's a positive because it still has room to run. But the negative is that it's not a small cap anymore. So we're not talking about a smaller L1 like Phantom, which is around a $3.5 billion cap. We're talking about something with a $12 billion market cap here. So it's not quite as cheap as it was a few months ago. So the upside isn't quite as high as it would have been if you were buying in, let's say, in January. But the major thing that makes me bullish on wNear long term is this VC factor. I mean, they've got Arrows Capital, Jump, Alameda Research, Coinbase, Electric Capital, all investing in wNear. wNear has very deep pockets and every resource at its disposal. So when you're betting on wNear, you're banking on all these VCs, you're banking on the venture capitalists, and you're banking on the ecosystem being able to develop at a rapid pace with all this funding coming in behind it. So that is why wNear is a pretty safe bet long-term in my opinion. Obviously, this video is not financial advice. The reason I think it's safer than other blockchains is because these VCs aren't going to want to let it fail. And as sad as it is to some people that we have decentralized ecosystems being propped up so heavily by VCs. At the same time, it does give security because it means that it has a lot of backing. So it's a lot harder for something with billions of dollars being injected into it to fail, right? So it's not on all Western exchanges yet. So NEAR isn't on Coinbase or Crypto.com. I would say that there is a high chance that it will be listed there in the near future because, I mean, come on, guys. Coinbase, I'm pretty sure they invested in NEAR, so why wouldn't they launch it? Yeah, we can see Coinbase actually invested. So the chance of it getting a Coinbase listing are very, very high. The chance of it going on Crypto.com is almost guaranteed as well because that's what tends to happen when these ecosystems develop. So let's look at a way to stake NEAR. We've talked about how high it can go. I think it can realistically enter the top 10, which would be a 3x. And in the long term, I mean, who knows? It could go a lot higher potentially. So let's look at how to stake it. Let's look at what the best opportunities are in the NEAR ecosystem to be able to stake this coin and earn some nice yield and earn some great passive income. So the first thing I want to say is that if you want to buy NEAR to get involved in staking, you can do so on ByBit. ByBit is one of the official show sponsors. And if you sign up for a ByBit account using the link in the description, you can stand a chance for us to double your portfolio. So on the show, throughout the next week, I will be going and doubling a random person's portfolio. If you've just signed up for a ByBit account using the link in the description, you're eligible and you can potentially make some free money. Who doesn't like money? Sign up to ByBit, and it's a great place to be able to trade as well. So you can buy your NEAR on ByBit if you want to get exposure. Once you have your NEAR tokens, you'll need a NEAR wallet. So to get involved with staking, NEAR's got its own wallet. So it's not on MetaMask. The Aurora network is because it's EVM compatible. But if you want to buy NEAR directly and get involved with staking, you can access your NEAR tokens on the NEAR wallet. So you'll need to create an account using the NEAR wallet. Once you've done that, this is where the fun begins. I'll be showing you my favorite liquid staking strategy on NEAR to be able to earn some nice yield on the NEAR token. So if you come into metapool.app, this is a website that facilitates liquid staking on NEAR protocol. So if you stake your NEAR, you can earn 11% APY. Now you may be thinking, this isn't great, but it is because we'll be able to stack that NEAR that you're earning 11% on into an application like Ref Finance to earn extra yield. So the first step is to get your NEAR tokens in your NEAR wallet. Then the next step is to stake half of your desired tokens into the metapool in terms of liquid staking. So if you have, let's say, 100 NEAR tokens, you want to take 50 of those tokens, stake them into metapool at 11% APR, and this will give you staked NEAR or ST NEAR in return. Once you've staked them in the metapool, to harvest your rewards, you want to go over to harvest. I do this, let's say, every week to keep it easy. And you can harvest your rewards in the form of the meta token, which of course you can then swap back for NEAR tokens. So it's very, very simple. You just want to stake half of your NEAR in the metapool for an 11% APY. But it gets a lot more interesting than that, because there's an application called Ref Finance, which is one of the biggest AMMs in the NEAR ecosystem. And this has some amazing pools to earn some quite tasty yield in the NEAR ecosystem. So what you want to do once you have your staked NEAR is you want to go into the Farms tab of Ref Finance. You want to scroll down and you'll find this pool called Staked NEAR Wrapped NEAR. Now, Staked NEAR Wrapped NEAR has no impermanent loss. So what this is enabling you to do is not run the risk of impermanent loss and earn yield, liquid yield on your NEAR tokens. And this is a great thing because you can earn a 15% APR on top of the 11% on half of your NEAR tokens for an effective APR of around 19% APR. And if you recompound your rewards, you'll be earning close to 24% APR. So 24% just to hold NEAR is a pretty good deal in my opinion. So once you have half of your NEAR in staked NEAR, remember, you'll have the other half of your NEAR still in your NEAR wallet. So up here in the corner, there's this little button. You want to click that button and you want to swap your NEAR tokens for wrapped NEAR. So if you put in your NEAR, you can swap those tokens for wrapped NEAR because the Ref Finance website only enables staking on wrapped NEAR. It's the same thing. It's just a wrapped version of the asset. So once you have your wrapped NEAR and your staked NEAR, let's say you have 100, so you got 50 wrapped NEAR, 50 staked NEAR, you can come in and click stake on this pool here. And what this will enable you to do is stake your tokens in order to earn this 15% APR. So all you want to do is you want to put in your shares that you get from adding liquidity under the pools tab. So you can click your liquidity. you can add a liquidity pair, and that pair will be the staked wNear wrapped wNear pool. You click add liquidity here. You add your staked wNear and wrapped wNear. So once again, that's under the pools tab. And then once you've got those tokens, which are LP tokens, you can come into the farms tab and then stake them under the staked wNear wrapped wNear pool under there. So I'll be posting this in more detail on my Twitter. I'll do a Twitter thread after this video if you guys want it in written form. But it's very simple. Just to recap, you want to have a wNear wallet where you buy wNear from an exchange and put it in. Then you want to swap half or stake half a staked wNear on the meta pool at 11% APY. Then you want to take half of the tokens that you didn't stake, combine them with half of the tokens that you did stake under your liquidity. You do this by clicking add liquidity, scrolling down to stake wNear wrapped wNear, pressing add liquidity. And then once you've got your LP tokens, you can come into this farm, click stake, and earn 15% APR. Quite simple, but what this enables you to do is earn an effective 24% APY if you compound your rewards. So just keep note, you'll be earning rewards in REF tokens, which is the Ref Finance token. Now, I do think this is a fairly good token as it's the biggest AMM in the wNear ecosystem with a market cap of 40 million. So if you wanted to keep your Ref, what you could do is you could actually swap half of your rewards back for wrapped wNear, and you could put them in this pool here in the top, which is Ref wrapped wNear, and it's paying 91% APR. So you can earn 24% APR on your wNear, and then you can take your Ref rewards, swap half for wrapped wNear, and create an LP over here in the REF wrapped wNear pool, and that will give you 91%. Now, that's a slightly more degen strategy if you want exposure to the Ref token. If you want the slightly more peeled back version and the safer version, then you can take your REF rewards from staked wNear, wrapped wNear, and you can compound them back into wNear. So every time you earn REF, you can click swap, and then you can swap back your REF for wrapped wNear. And what this will enable you to do is compound back into the base pool, so you can swap your rewards back into wrapped wNear and then obviously restart the cycle again. So come back into meta pool, stake your wNear, come back in, create an LP, and then obviously once you create an LP, you're starting the loop again because you're earning compound interest. Compound interest is one of the greatest wonders of the world, guys. So you'll be able to earn extra yield if you do compound. But you can also go safe and take your profits into stables. It's really up to you with what you do. But that's probably my favorite staking strategy in the wNear ecosystem because you are retaining exposure to wNear. You're keeping your tokens liquid, so you're not locking them up, and you're not going excessively degen with some of these other ecosystem alts. The REF token and the wNear token are considered relatively more safe compared to other tokens in the ecosystem. So overall, my thoughts on wNear, I think it is a great L1. Once again, the amount of VC backing that's backing this token means that I feel pretty confident that it's here to stay. If we look at the state of CoinGecko right now, I believe wNear is rank 16, rank 14 if we discount these stablecoins. So it's actually quite high up on the list, and it's performed very, very well. I am expecting to see wNear in the top 10 at some point. Honestly, I think it wouldn't be hard for it to get there considering it would need to around 2x, which I think is very fathomable over the next few months. But it is going to be harder to achieve massive multiples on a token like wNear itself because it already has such a high market cap. So to try and get wNear from 10 billion to 30 billion is a lot harder than a token that's, say, 2 or 3 billion. So I do think it's a good play. I think it's one you should accumulate long term. Definitely don't ape in. I don't think that's necessarily the way to go with wNear. And once again, remember, this video is not financial advice. It's just a token that I think is potentially a good play and a very solid L1 ecosystem that is now starting to develop at quite a rapid pace. I hope you guys enjoyed the show. Make sure you smash the like button if you enjoyed. I'll catch you on tomorrow's show at 6:30 p.m. EST. See you in the next one. Peace out.